Hello, everyone. Here we are with another Bitcoin intelligence report by 21st Capital. Um Last week we went over mostly we focused on the futures market because when we looked at the spot market, you couldn't see much bidding while price was recovering from 107 and OI was like increasing while the market was getting closer and closer to the FOMC meeting date. So it was pretty obvious that market was mostly absorbing some liquidity, and I would say most of it was leverage liquidity and beat all the way to 116, and people were anticipating a very positive outcome, and they were like buying the rumor. And that happened actually. The rate cut happened, and people got what they were expecting. But looks like they were starting to sell the news, even though we saw some volatility all the way back again to 116.17. But at the time that we were writing this report, we were showing the very, very leverage driven or futures driven rally to 116, and we were talking about the max pain because market was around 117. We were saying 116 is a very strong very important support. It was fragile because it was pretty futures market driven rally. So we were saying 116 is the max pain based on the liquidity heat map on the perpetual market. And we were talking about losing 116 would open the door that we get to 112.9, which was the long side max pain if you look at the heat map. And we were saying on the other side, seeing the spot market beating above 116 and market finds its leg above 116 and stabilize around 118, opens the door to go to the all-time high that we had recently, 124. So the first scenario, which was breaking below 116, happened, and market began to correct itself all the way to 112 at the time that I'm recording this video. Let's look at the general market navigation, because after the rate cuts, a lot of people were speculating both sides, like bear and bulls, were talking about crazy numbers. Like some people were saying, okay, this rate cut is gonna turn the tides towards the risky assets, and a lot of people are saying no, actually, the rate cut is not gonna fix anything, and like this rally was totally leverage driven, and we're gonna go down all the way. I saw numbers even around 20,000 or 5,000. We're not talking about the exact target here. Let's just use some technical and on-chain metrics to just see where we are. Like in midterm, we can use these metrics to see what is the most probable scenario in midterm. But like I said, giving it price target, especially for long term, is pretty like baseless type of analysis, which I'm not a fan of. If you look at the rally from cycle low all the way to here, which is like it's been shown relative, the price has been shown in relative way relative to the day one of this cycle, which is the lowest point in this cycle, and all the way from that day onward, you could see the ratio between current price and the price at the beginning of the cycle. You could see this cycle was pretty aligned with last two cycle. If you compare it with the 2000, I think 18 all the way to 2022 and 2015 all the way to 2018 peak. We are around 1,000 day, I think 1,000 day and 35, which when you compare it to last two cycle, it's really interesting. Like the top was in 20 days from now. If we just look at the 4 year cycle, which I'm by the way not fan of, like exact 4 year cycle, even if it happens, is mostly because people got used to that framework and they're following it. In terms of having and other important factors, which was controlling how much issuance is creating some sell pressure in the market, it's so insignificant now. Like the amount of coin mined per day is not even comparable with a large centralized inflow outflow anymore. So in terms of like affecting on the market liquidity, having the 4 year predetermined day that was happening, that predetermined event is not gonna cause a supply shock or any kind of like term they were using in two cycles ago. But maybe people are still believing in that framework, and their thought about that 4 year still being like an important matter in the market might drive market a little bit low when we get to this phase. And nowadays we're pretty close to that top formation if you just look at the dates. But I just want to show you the point that I wanted to make here is, even though, like I said in last 2 or 3 reports, that even though today is the end of the bull market, we have had a very healthy bull market so far. And the overall downtrend in the cyclical return, you can see every cycle the overall or the ultimate return is just declining. It's been a trend that we have seen since the first cycle. Market is getting bigger, it's becoming more mature, and it is becoming a larger asset. That's why moving the needle is going to be harder and harder. And this trend have been all the way from 2000, from Genesis 2011, that cycle, all the way you could see this cycle have been repeated. And now we are very close to that 1,000 days or 1,000 days or 50 almost. If you're around that, like length of bull market, and seeing a bear market starting is pretty aligned with last two cycle, which is very interesting. I was not expecting to get like exact same date, but we have to see, do we get a bear market, then we can say, oh my god, that 4 year cycle still has some credibility. That 4 year cycle is something that maybe a lot of investors believe in. And like, we have to look at the other metrics to define the 4 year cycle, because right now we're using just time and price and say, oh, every 4 year we should see a top and then market's going to correct. If this doesn't happen, let's say the bear market start now instead of 1,000 days of or 50 or something like that, because look, 100,000 60, 100,000 67. If let's say we start to have bear market again, we have another rally, like break out of that 4 year cycle, because that's where I think we are heading. I don't know if it's going to be this cycle, the cycle after. We're going to be mostly business cycle driven kind of like market, and we're going to see a business driven cycle in the Bitcoin market, or we might see some macro driven cycles in the Bitcoin market. Until then, we have to check it and see if we get a bear market after around 4 year, like almost. But what I really try to do is, usually I try to use the Onchain data, something that looking at the liquidity directly, not via just price, because using just price is a little bit naive. We can use other metrics to see where we are in this cycle. For example, we can use the percent of supply in profit, because this metric is measuring what percentage of supply is in profit. Price is above what percentage of supply. Cost basis of what percent of supply. Usually, when the percent of supply in profit reaches to level like 90% and above, that means the majority of supply is in profit. That is a euphoric phase. All of investors are in profit, and they most likely gonna start to realize some profit. But especially at the beginning of bull market, when we reach the euphoric phase, which is almost above the last cycle stop, you could see, even though there are lots of profit taking due to the dominance of profitability, market has in strong momentum to absorb this sell pressure and it's still going up. Like, look, 2016, we have 1, 2, 3, 4, 5 major rallies that every time market faced a very nice momentum, and almost 100%, above 90% of supply got into profit. Then sell pressure pushed the price down, and you could see the new buyers, which have a cost basis at the new prices, new high prices, we're going to go back into the loss, and that's a sharp decline in the supply and profit. But we had 5 waves. Every wave it got sharper and sharper, and price moved much faster because we're getting closer and closer to top formation. In the last cycle, we had a second longer extended leg, 3, 4, and then we had the China ban crash, and 5 strong rallies that every time we just hit that euphoric phase, we saw some sell pressure pushing the price low. Usually these the euphoric phases that we are underscoring by supply and profit here are very fragile. Understandably, like I said, the majority of coins are in profit. They start to sell. In this cycle, we have one, two. This one was very short amount of, like a matter of 2 or 3 days. We don't count it. 3, 4, 5 almost. So we had 5 tiny rallies. But if we take the midline, which is like a pretty deep point in the bull markets, like it's almost a pause on bull markets, we had 3 major rallies in this cycle. Like in that 3 phases, you could see it was pretty longer. If you go back, the number of days that we stayed above 90% supply and profit was a little bit short in 2016. Look at what happened in last cycle. We had only one pretty long euphoric phase. This time we had 3 pretty long euphoric phase, meaning market was more mature. Even though it got to the euphoric phase, it gave more opportunity, longer opportunity for the profit takers to just take their profit, and that was due to the demand side being more mature. They were patient. They were not acting mostly out of emotion, and they were bidding at a little bit discounted prices, but they were very patient. They were not just buying and start to sell as soon as price breaking below their cost basis. So we were in the almost third wave that market started to crash to 107, but the FOMC meeting actually gave some momentum to the market, and price got back all the way above 90%, cost basis of 90% of supply, and we got back to euphoric. So that was a very abrupt recovery to the euphoric, which seems to be pretty fragile, because like I said, we're at almost second leg of last wave of returning to the euphoric phase. More than 90% of supply being in profit at 124, 95, 96%, and at the all-time high. Momentarily, this metric is going to show 100%. But the point is, we were around almost since end of April, early May, we were back into the euphoric phase, and all the way from early May, we were seeing that euphoric phase was prevailing in the market, and that was causing a lot of sell pressure that we highlighted in last 2 reports. So that sell pressure was there, but still they had some momentum, mostly because people were anticipating that rate cut is going to be a long-term regime. It's still yet to be seen, but if you look at data up to today since the FOMC, seems like the news part of the event is rolling out, and let's see what happens. But so far, we are at the time that we were writing this report, we were around 116, but now I'm recording the video, market crashed to 112. That means we are back into non-euphoric phase, and that might usually cause some sell-off due to the fear, because the top buyers that bought at 116 now are reacting to the price correction. Now let's look at the what is this? What is happening when market is in this euphoric phase? The major thing that happens when the market is in the euphoric phase is the long-term holder, the people who held their coins above 6 months, almost 155 days. Their behavior is, their profit taking is the major key factor that is forming the top, meaning that sell-off pressure that is exhausting the market while we are in the euphoric phase is mostly coming from the long-term holder. The investors who are less price sensitive, they are patient enough to wait for market get to the levels that are they are holding onto a very considerable size of profit margin, then they start to sell. Here we measure the realized profit by these investors. You could see every time we had a euphoric phase breaking above 90% of supply and profit, they started to realize profit massively. Look at what happened in 2016. And usually when we get to the last stage, that because early euphoric phases in the bull market, you could see the realized profit is much larger, because they have been waiting long time, probably multi-year, and now they got the opportunity, they start to sell. But as we go on and get to the next phases of the bull market, the peaks that is showing the realized profit by long-term holder are getting lower and lower. It's diminishing because market is getting exhausted in the macro scale, in the cyclical scale. Look at here. The first rally in the bull market, we had a very sizable profit taken by long-term holder. Again, we had some heated profit taking, but they were much shorter in terms of like time and much smaller in terms of magnitude. The same thing almost happened in this cycle, but we had pretty timely and extended profit taking by long term. Look at the first one, the second one, and the third one, all the way in late July. And this, if I zoom in the FOMC dates, we had a very, like almost late August, we had a very short uh, profit taking regime, high profit taking regime by long term holders. And on the day or 2 day before the FOMC, we had a almost uptrend in this profit taking by long term holder, but it was not as significant as what we saw back in July. So it shows some profit taking was happening, but market was showing that downtrend anyway. So there were not enough demand momentum to absorb, even though we saw price going up all the way to 117. That was, like I said, it was much futures driven, perpetual market driven than in the spot market driven. But that sell off happened anyway. If you show this one on an hourly basis, it will be much clear, much more clear picture. But we had some rally here from almost 5,000 BTC per day. We jumped to 7,000.6 in realized profit by long-term holder, which tells you like we had some sort of profit taking by long-term holder. The fact is, these peaks are getting smaller. They're diminishing because, like I said, market in general is being exhausted, and that is actually the baseline for assuming we're going to have a bear market in midterm. As soon as like market get a little bit more like settled after the FOMC, people are gonna start to sell the news. We have to see if we get back to 117 in coming days. If not, breaking below the cost basis of the short-term holder, which is 111, is gonna trigger a bear market, at least something like what we saw in 2024 in April, or something that we saw in February 2025. This is very possible, especially after going through the third wave of this cycle. Now we can look at the ETFs inflows, which were like very important factor in this market. They were a proxy for stratified demand for BTC. You could see in this is the first wave we were talking about, second wave and third wave of like market rallying. You could see every rally was in conjunction with like a lot of inflow, like a multi-week, if not multi-month inflow, massive inflow to the ETFs wallets. That was the leg for a pretty good rally in the market, all the way back to euphoric phase, seeing some sort of like long-term holder realized profit. Even the last rally, like the third one, we had a multi-week or multi-month of strong inflow into the ETFs. The recent rally above 107, we saw 1 week, I think it was the second week of September, we had a good inflow, which was mostly, I think, a pretty speculative move because ahead of like FOMC meeting, people were saying, okay, the rate cut is going to happen, BTC is going to skyrocket. That was like the sentiment, especially among the short-term speculators, and that was the reaction. But like you saw last week, that was not sustainable. Like, it still was pretty high, like 1 billion, because that was the week of that announcement. We have to see the coming weeks are going to see some sort of like a strong rally again, and we're going to use that as a baseline for speculating about, no, this is not a bear market, especially if we get some support around 111, which is the cost basis of short-term holder. But this metric is going to help us to see if we saw some momentum in coming days, does it have a base in the stratified demand side as well, or no, is it just some temporary futures-driven rally like what we saw after the FOMC or days before the FOMC, which was mostly futures-driven rally? We have to see, but breaking below 111 will be really significant. And why? Because if you look at the cost basis of the short-term holder, which is here, the red line, since cycle low, we were staying above most of the time, and when we broke below it, we were in a bear market at least for a couple of weeks, if not in multi-month, back in 2024 or I think 2 months, almost 2 months in 2025. So 111 is very important. Why is it important? Because that is the definition of, okay, the major condition of confirming that we are in a bull market is when price is above that cost basis. If we break below and stabilize on a weekly to monthly basis, that's the beginning of the bear market. That's the beginning of a long-term bear market. How long, we cannot say for sure, but that is a threshold, a price model that we use as a threshold to define or consider as a trigger for a bear market. Because when price stabilizes below the cost basis of the short-term holder, what does that mean is market is keep trading below the cost basis of the recent buyers. That's going to kill the buzz. That's going to kill the momentum. We need price staying above their cost basis to encourage new buyers to join the market and start to deploy some capital. Breaking below their cost basis is a very impactful psychological event in the market because it's going to spook them and it's not going to give them enough incentive to beat up the price. And now we are after breaking above 107, we got a really nice support by short-term holder supply and short-term holder cost basis, meaning they start to sell as soon as price got to their cost basis because they wanted to wait and sell in profit, possibly. And after September started, like I said, the FOMC meeting was a big driver. Market was expecting some sort of voodoo from the FOMC meeting result, and that caused the price to rally above. But while price was rallying above, this heat map is showing who is selling or who is buying compared to 90 days ago. If you see strong green, that means in that cost basis, compared to 90 days ago, we saw some sort of accumulation. If you see strong red color, that means compared to 90 days before that day, that cost basis saw some sort of like investors that bought at that cost basis start to sell some BTC. From 107 all the way up, let me just zoom out a little bit. Okay, this is, you could see from 107 all the way to 117, we see a lot of red ribbon started to show on this chart since then. That means there were a lot of sell pressure from people who bought at, like, for example, 95. A lot of people bought at 105. A lot of people bought at 85. You could see between 70 something all the way to 105. The people who bought while market was rallying to the recent all-time high, they start to realize profit. They were selling a massive profit, selling BTC to a lot and realizing a lot of profit. That was exhausting the market. On top of that, you could see the green here is getting closer to yellow. That means they were selling too. Some people who bought while market was just correcting, assuming that's the bottom, they waited for market to bounce back to their cost basis and they start to sell. So they were selling significantly here, and they were exhausting the market. So the rally to 117, beside the fact it was mostly futures driven, we saw at least at the early days of the September, it was facing a lot of sell pressure in the spot market. That's when there's a divergence between the spot and futures market. At least it was pretty quiet in the spot market if we don't consider the first leg, part of this leg, which was mostly sell pressure based on Onchain data. It's pretty clear that it was futures driven, and that sell pressure by people who bought at 95 or 105 and below, it was just pretty consistent all the way to the weekend. You could see they were selling, and that red ribbon did not turn to yellow, or which is 0, which means no change compared to 90 days. It was keep the red state, which is around 150 to 200,000 BTC sell pressure from that cost basis, and that was consistent, and that can explain the sell pressure. The spot market was more strong when we got to 117, and that futures driven or perpetual driven rally got to his last in terms of moment start to diminish when we got to the end of the week over the weekend, and that's when the spot market dominance in terms of sell pressure got more stronger than the buy side in the perpetual, and we start to see some sort of weakness in the market. Right now, what I will look for is where price is in coming days over the next week. Is it gonna stay above 111 and get some support there, that's another positive signal like what we saw in late August. If we break below and stay there in order of a week, that's going to be a very strong signal for market. Probably is going to entering another at least midterm bear market, and based on that, what we saw last time, we usually go around up to 10% below. Like if we take just this cycle's extreme numbers, around 10% correction compared to the cost basis of the short-term holder is the low if we still have some chance to see a rally in this cycle. But if we're going to repeat ourselves and see some sort of like multi-month, multi-year bear market breaking below 10% of the cost basis of short-term holder, which is around 90, 92, would be a very strong negative event in the market. But 111 is what we're gonna look for and monitor in coming days, and hopefully by next week we can see have a better picture. Are we gonna get some support around 111 or not? Until then, use this metric, short-term holder cost basis, and any short-term holder indicator would help. But this one would be very strong indicator to navigate through the coming weeks, staying above it, above 111 or cost basis of short-term holder, because it's a dynamic concept. You have to check it every day. Staying above it is going to be a very positive signal to the investors that no, we are not selling, even though we bought recently and we are holding on to a small loss margin. Still, we are going to hold through this correction and market might see some bounce back. But breaking below is going to cause, usually, I mean, historically has caused a sell pressure, especially by the top buyers who sell and capitulate when market see the spot price way below their cost basis. So we will check this metric again next week. Until then, be safe and see you next week.